Good morning, everyone. Today, I have a very important presentation today. Thank you all for attending today for one, but I have a very important presentation today. The name of my presentation is Hot Audit Topics. We're going to cover the hot audit topics of component units, inventory, and support documentation. The first topic we're going to cover today is component units. In this section, I want to accomplish a few things with you guys today. I want to go over what a component unit is, define it for you guys, how this affects you guys in your audits, and how to determine component units in your audits. We have a component unit checklist we go through in each of our audits before each audit. That checklist can be provided as a resource, as we just have in Excel, if you wish to have that after this presentation. Here's the standard boilerplate definition of what a component unit is. It's outlined in Statement 14, GASB Statement 14, and it was amended by Statement 61. To paraphrase this is a component unit is a legally separate entity that has a significant relationship with the primary government. So it's another type of organization that's legally separate, where if you did not include them in your primary government, you would mislead the financial statement reader. So really, we're looking at other organizations that have a significant relationship to your primary government. And in the next few slides, we'll give some examples of these component units for each type of primary government. We'll talk about the various criteria for inclusion. And so I have some of them listed here. Financial accountability. Is there a financial benefit or burden that exists? Do you appoint a voting majority of that component unit's board? Can you impose your will on that component unit? Can you tell them how to expend their budget and what to do with it? We'll go over more of that in the checklist also, but there's more in the slides to come. First, I want to give some examples of some component units so you can look out for them in case they're in your audits. We audit several entities in our office, so I wanted to just touch on a few of the primary governments we audit and some examples of those component units. Just note there are other component units out there other than the ones I've listed. I just wanted to touch the key ones that we've typically come across in our experiences. The first type of component unit, or the example of a primary government, is a county. In our experience, counties usually have the most types of component units in their audits. I don't think there's one county that we audit that doesn't have a component unit, so it'd be more strange to not have a component unit than to have a component unit if you're a county. Not saying you must always have a component unit if you're a county. Maybe there's just, in your scenario and you don't have one, there's just no entities out there that meet the definition of criteria to be included. But from our experiences, there are component units out there for those counties. Some examples I have listed here are water resource districts, job development authorities, health districts, fair boards, and weed boards. And not saying if you have all these in your county, they must be component units. It really depends on your scenario. Maybe your fair and weed and health are special revenue funds, and they don't meet that definition of a component unit. It really depends on your criteria, and that's why that checklist is crucial to go through and just see what that relationship is like. And just a side note for you guys, if you are a county and you do not have any component units, I would highly suggest you guys start evaluating just to make sure you're not missing anything in your audits. The next example of a primary government I have is cities. Cities also do have component units too. We typically don't see as many component units in city audits as compared to county audits. Some examples I have today are airport authorities, libraries, job development authorities. There are other examples out there, like I mentioned earlier. There are some cities we audit that don't have component units just because they're smaller cities. So some smaller cities don't have an airport out there or a library. So there's no organization to evaluate. So it really depends on your city. And same thing like the county. I would highly suggest evaluating any component units organizations you think could be, just to be safe. School districts. So in our experience, school districts typically do not have component units, but they can. So don't think you're in the clear if you are a school. Still make sure you are going through that checklist and evaluating. Some examples I have today are a building authority or a foundation. Foundations are also tricky because sometimes foundations are more set up as a nonprofit and they wouldn't meet that definition of a government unit or of a component unit. So just make sure you're evaluating component units just to be safe if you're a school. I don't think there's any schools we audit in our office that have component units. I just want to make it clear that you're not in the clear, you still can technically have a component unit. So you guys are probably wondering how this affects you guys. Well, the main reason is you guys all need an audit. So our code is 54-1014, and that requires the state auditor to audit or review each local government once every 2 years. I say review because there was a new Senate bill passed last session, Senate Bill 2180, that required if you have under 2 million revenues, you do not need a audit. You can have a review. That's just take that with a grain of salt, because if you are a smaller district and you are required to have a single audit by GASB or as a component unit, or if you need a single audit, you may still need your audit, formal audit done, not a review, but that was to provide some relief for some of those smaller entities that are just kind of standalone that can just get a review instead. But where it really can benefit you if you are a component unit and you need an audit is you can potentially save on audit costs. If usually being audited as a component unit, audit costs are usually cheaper compared to having your own standalone audit most of the time. So if there's a chance you can be audited as a component unit and you currently aren't, there's a chance you can get your audit done at the same time as the primary government, and that in turn will save you on audit costs. Primary governments, the large governments, how it affects you guys. One big area is you could have missing information. If you don't have all your component units in your audit report, you could be misleading that financial statement reader or anyone who relies on your financial statements for decisions. So you just want to make sure you're doing that evaluation and really making sure that you're including all the complete and accurate information in your audit reports. Next, I wanted to go over the component unit determination. And here I'll really explain what types of component units you can fall under and scenarios you can fall under. And then we'll talk about that checklist like I mentioned earlier. So first, the main common one where you can qualify under if you are a component unit, we typically see is called discretely presented component units. So discretely presented component units it's a legally separate entity, and they need to be included in a separate column in the financial statements from that primary government to show they are legally separate. So in your government-wide statements, often you'll see a column for the government-wide, in your government-wide statements, you'll see a column for your primary government and also a column for that component unit. That's what that column is there. It's all their financial information, and it's just separate to show they are a legally separate entity. So this is where a lot of the component units we evaluate, this is where they fall under when we're doing that evaluation. There are other types of component units I'll cover here, but first there's a chance that you aren't even a component unit. You do the evaluation, you find out, okay, maybe you're a fiduciary fund. You do the evaluation and you find out, okay, that it's really just an in and out fund for tax collections. Okay, so we're going to classify this as a fiduciary fund. Or you do the evaluation, you find out this is a governmental fund. It should just be a special revenue fund after you do that evaluation too. So just note there's a chance you are not a component unit. You can fall under those scenarios if you're a governmental fund or a fiduciary fund. The other type of component unit you can be is called a blended component unit I wanted to cover today. This is it's still a legally separate entity, but all your financial information is included with that primary government. So your financial information is in that column with that primary government. You do not get a separate column off to the right. You are not a discretely presented component unit. You are a blended component unit, and you get blended in essentially with that primary government. Blended component units are outlined in statements 61 and 80 for blending component units if you want more information on the GASB standard, but there is some criteria I wanted to cover today with you guys on what kind of makes a blended component unit, which I'll go into now. The first one is if you are looking at a potential component unit and you see that potential component unit essentially has the same board as your primary government, that's a good indicator you have a blended component unit. Another key, and then also if management of your primary government really oversees all the operations of that potential component unit and they have financial responsibility, they're really doing the doing the financials for them, preparing the financials for that board also. That's a good indicator you have a blended component unit. Another good indication is regarding if that potential component unit provides services exclusively for that primary government. So if you are a water resource district, for example, and you only provide services for that county, there may be a chance it's more of a blended and not a discretely presented component unit if it meets the other criteria too. Then the last one is regarding debt. So if that primary government is the one who's really going to be the one paying off that debt of that potential component unit, or the majority of it with their resources, there's a chance you have a blended component unit also. So blended component units are slightly different from the discretely presented ones. They don't get a separate column. They're essentially blended in with that primary government. Next, I wanted to go over the checklist, like I mentioned earlier. This checklist, like I said, it can be provided as a resource. We just have it in Excel, so it should be pretty easy to export and share with you all today if you don't have a resource like this to use. This checklist has 20-some questions in it, so I'm sure I could spend all morning and day going through each question with you guys, but we have limited time in this section, so I'm going to just cover some key points in this and show you how this flows and show you the conclusion section too. But like I said, it can be provided if you wish to have the full checklist. So in this example, it looks like we have 7 potential component units we listed out. We listed them out 1 through 7 and then across the bottom there. And then all we would do is simply go through the checklist. Like I said, answer each question what the instructions tell you to. So the first section is asking about legally separate entities. It really wants to get that out of the way because component units have to be legally separate entities, if you guys remember. So the first question is asking if that potential component unit has separate corporate powers that would distinguish it as being legally separate. Now, to have separate corporate powers, you have to answer 3 questions, and yes to all of them. The questions are, does that potential component unit have the capacity to have its own name? Can that potential component unit, does it have a chance to be sued without any recourse to that primary government? And can that potential component unit buy, lease, and mortgage land in its own name? If it answers yes to all 3 of those, it has separate corporate powers, and you can mark yes on this checklist. If it doesn't, if you'd only answered 1 to 1 of them or 2 of them or none of them, you would put no on here and keep going down the checklist. It's important to follow the instructions because, for example, if you answered yes in question 1, you would skip over question 2 and go down to question 3 and keep going down the checklist. If you answered no to question 1, you'd go down to 2 and keep going down the checklist. So in this example, looks like the water, JDA, health, and fair, we all answered yes to for this checklist. So we would go down to step 3. Then the senior citizen, county historical, and the weed board all answered no. So our instructions are to go down to step 2. Since they don't have separate corporate powers, number 2 is really asking you, okay, who then has those corporate powers? Does that primary government have them? For the weed board, it looks like the primary government has those corporate powers. So now we get to skip all the way down to step 26 and check the box yes. In that case, more than likely it's going to be since the primary government holds them, it's going to be some type of governmental fund. The county historical and the senior citizens we marked as no. So more than likely there'll be some sort of fiduciary fund since someone else has those corporate powers. And like I said, guys, you just want to keep going through this checklist. Here's another example of a question. It's asking if the primary government appoints a voting majority of that potential component unit's governing body. So an example I have here is if you're a water board, does the county appoint, if you have a 5-member board of your water resource district, does the county at least appoint 3 of those members? If they do, that's a majority. You would answer yes here and keep going down. If they don't, you would answer no and keep going down. And you eventually would keep going through this checklist, guys, until you get to this conclusion section, which tells you what you have. So it looks like the water, the JDA, the health, and the fair all marked yes as a discretely presented component unit. So that's what they are. They're going to have a separate column in those financial statements, and that's how they would be presented. None of them met the criteria for blended component units, so none of them, you can ignore that section. And then the next one is, no, they're not a component unit. We found out that the primary government, they don't have separate corporate powers, and the primary government doesn't hold them. So we found out I have agency fund written here, but we do call them fiduciary funds now. So they're maybe more of a fiduciary fund. They're maybe more of an in and out for tax collections. And then lastly, we found out the WE board is a governmental fund, and we're going to call it a special revenue fund after the evaluation. So this checklist is a good resource. If you want it, we can provide it. We try to do this annually, guys, or before each audit. And we do it annually just because sometimes things change. Sometimes new funds are created you should evaluate. Sometimes new entities are voted into existence and there's new organizations that come about. So you just want to make sure you're evaluating. It never hurts to over-evaluate, just to double check and be sure. Some other areas in that checklist, just to conclude on the checklist, we went over the makeup of the board to answer that. Can that primary government impose its will? Can the potential component unit, is it fiscally dependent on that primary government? Those two questions will really drive more of a blended component unit conclusion. And then lastly, just so you all know, all of you guys today are very important because you have a key in this checklist question. One of the questions is asking about, based on your knowledge as management, if you didn't include them, would it mislead the reader due to the significance of the relationship? So depending on how you even answer that question could drive that checklist. So just know you are a key piece in that. And that's why I want to make sure every question is answered honestly and accurately, because it will really drive that checklist. To recap this section, we went over component units and how to properly evaluate them. We also went over some examples. And just note that evaluation, just make sure it's being done. If it's currently not, your auditors at least should be doing it. If you don't think they're doing it, it doesn't hurt for you to even do an evaluation of yourself. So like I said, a copy of that Excel checklist I went over can be provided as a resource. Our next section is inventory. In this section, I want to cover a few areas regarding inventory. I'm going to go over what inventory is, what happens if you guys have inventory in your audits and how to calculate and measure it for your audits, how inventory is presented in your audits and what that looks like in your financial statements, and some best practices for you guys to take away with inventory. Here's the definition of inventory. Inventory is an asset that can be realized for revenue generation or as a value for exchange. So that means if you can sell something, so your inventory, if you can sell it at a dollar value, that dollar value then will be presented in your statements as that amount in your financial statements as an asset. So if it has revenue generation, it has a value for exchange. That's a key indication. Some examples I have today are gravel, culverts, chemicals, and vaccines. Just note that there are other types of inventory out there. These are just the common ones we've come across in our audits. You can come across other types. We just wanted to touch base based on our expertise and our experiences, what we've come across with. Gravel's been a popular type of inventory we've come across, especially for counties. And I'm not to pick on counties, they just usually are the ones who do most of the activity for roads throughout the state. They are the ones who usually are doing work on those rural roads, graveling those roads. So sometimes it's easier for them to stockpile gravel and use it instead of just buying it and using it throughout the year. I'll emphasize this enough, guys. You only have inventory if it's on hand and it's stockpiled, if it's measurable. You don't want, if you use it throughout the year and you don't have it on hand at your end, there's nothing you can measure at your end. So it's only if you have it stockpiled. Counties also have a lot of stockpiles of culverts and chemicals, and then health districts are usually the ones who have the vaccines. And just note there are other entities can have this inventory. For example, the health districts, we usually just see them have the vaccines because that's just the nature of their operations. And then like cities, for example, can always have gravel or culverts and chemicals. It's not exclusive to counties. So I apologize if I reference counties often through this. They're just the ones who we've come across who typically have this type of inventory. So what you guys need to know and how to measure it. So your fiscal year end date is really the date of your measurement. So for example, if you have a calendar year end fiscal year end date, so let's say at 12/31 fiscal year end date, that is the date you want to do your measurement of inventory. Now I know it's not ideal in North Dakota on New Year's Eve to go measure gravel pits. So try to do it when all the activity is done for the year. So that means, for example, for gravel pits, if you're done hauling and adding to your pits, say in September, maybe measure it in October. If your pits are not going to change at all, don't measure it, say, in August, because your pits will change and they'll be either less or more. And then when you do your measurement, it's not going to be the same amount of pits when you try to do your calculation. So I know it's not ideal, like I said, to do it in January or December, sorry, in North Dakota outside. So just try to do it when all the activity is done so you guys can get an accurate measurement and then calculation. So your total monetary value of your inventory at your measurement date is your value of inventory. So after you do your calculation, you come up with your dollar value. That dollar value then goes as the amount on your financial statements. So that's why that measurement and calculation is key. You also want to evaluate your inventory for materiality. So just note that materiality, you'll often hear your auditors throw out. Materiality essentially is it a significant item? You know, something material. So to your opinion unit. So that means if you do a count and a measurement and you have $5,000 worth of gravel, and your materiality is $500,000 or in the millions, that's not material to you guys. You don't have to include that type of inventory. Then you can pass on it and move on. If you didn't include it, your financial statements would not be materially misstated. If you have $500,000 worth of gravel though, and your materiality is usually only 50,000, more than likely that's going to be material to you and significant to your operations. So we can't just pass on it. If you don't include it, you could look at an opinion modification. So just note to always try to look at significance. If you think this is a big deal, a significant issue, you know, bring it up to your auditors and they can evaluate it and see if they should be including it in your financial statements. So first I wanted to go over each type of inventory and kind of give you some examples of how to measure or calculate it from the measurements and just some other great information in each type of inventory. So the first one, as I had mentioned, we're gonna go over gravel. So the first thing you should do, you should try to identify your total population. So where do you have all of your pits? Are all of your pits located on your entity's land? Are they on landowner's land? That's important to know because if you have gravel on landowner's land, more than likely there's some sort of royalty payment you have to pay. That means a royalty is just for the convenience of having it on their land. You have to pay that service to them. So for example, if you're doing your calculation and your normal cost you're using is $8, but there's a $2 a ton royalty, you want to include that in your calculation. So you really have a $10 a cubic yard calculation. So royalties are important. So that's really only if it's on landowner's land. If you have it all on your own land, more than likely there's no royalty. An example I have here is we're going to say that there's 3 pits. Let's just say they're all on landowner's land, so there is a royalty included. And for simplicity, let's say each pit has 10,000 cubic yards. You would then add up after you've done your measurement, you would add up your 3 pits, and you have 30,000 cubic yards. You then take it by the price you've determined, so you have $10 a cubic yard here. Your total inventory is $300,000. If that amount is significant to your entity, you would include in your financial statements as that $300,000 amount. Just note that it really depends on your entities. Some bigger entities, maybe that's not significant to them. They can move on from it. Smaller entities, maybe it is. Maybe it is significant enough. So that's just a kind of a key calculation, but really where the key process is in this measurement that I wanted to cover. The measurement is a key process. I'll stress this enough that it really drives what the volume is in those pits. That's why you want to make sure a formal measurement is being conducted. You know, I'm sure we'd love to take your word for it that, you know, there's 10,000 cubic yards in this pit, 5,000 in this pit, 2,000 in this pit, because Joe from the highway told us. Well, I'm sure Joe is accurate, but we need that corroborating audit evidence. We need to see how that measurement was done. We can't just take Joe's word for it. So it's important to show your auditors that measurement you've done. I think drone reports are a great use of measuring. They can go up, take images of all of your pits, and then they can also shoot down and measure your pits. And you can then use that as audit evidence. There are other ways to measure pits also. If you don't have any resources at your county or local government, if you don't have an engineer on staff that can do it, I would highly suggest you guys reaching out to a third-party engineering firm to see if they can then go drone your pits for you to get that accurate measurement. It's just important because that measurement really drives the volume for your calculation. And you want to make sure this measurement's being done when all the activity is done for the year. If you can't do it at 12/31, just do it after all the activity is done. Get your measurement, do your calculation, see if you need to include this gravel as a type of inventory. All right, so some other areas with gravel. Are you keeping track of your documentation throughout the year? How is your inventory being hauled away? Are you keeping track of your hauling slips? All the activity that's being added to your pits. Are you keeping track of your crushing invoices or receipts? That's important because that's all the activity throughout the year too. Your auditor may also select a sample to look at to make sure you're tracking inventory correctly and supporting the amounts you are saying. Just note, it's just like support in anything. It's always good to maintain that support and track it throughout the year. And then lastly, just make sure that royalty payment, make sure it's being paid to landowners if you have it. If you have all that, if you have a formal measurement, you have all the activity for hauling and crushing, and you know what if you have a royalty payment, you are at a good start with those. If you don't, I would highly suggest you guys start looking into that. To recap this gravel section, ensure a measurement's being conducted. Just make sure it's as close as you can to that fiscal year end date or after all the activity. You know, some entities have a June 30th fiscal year end date, so it's whenever your fiscal year end date is. Ensure hauling slips are being documented, same with the crushing receipts, and ensure royalty is being paid, and you are in great hands. Moving on to culverts. Culverts are easier to keep track of just because they're not a million pieces of tiny rock like gravel is. And just note, I'll stress this enough, culverts, you only have to worry about including them in your inventory count if you have it on hand. If you just buy culverts and use them right away and you don't stockpile them at your end, you don't have anything on hand to measure and count. So it's only if you have it stockpiled. If you buy a lot of it at your end, and you don't even take delivery on it yet, you don't have anything on hand to measure. So it's only if you have it stockpiled and on hand, and you can physically measure it at your fiscal year end date. That measurement, that process is all the same. You want to do it at your fiscal year end date, ensure counts being conducted, and you want to make sure your different culvert sizes and prices are being tracked because culverts can range in sizes. So I'm sure they have different prices and sizes you want to keep track of throughout the year if you are stockpiling them. Next, you want to calculate your culverts then. So it's really the same process. Just do your count, measure it, and then just do what you guys have historically done. If you historically don't sell any of your culverts to the public, you only use it for your public use, your own use, maybe just use the price more at cost. But if you maybe sell half of your inventory to the public, maybe you add a couple dollars to that price to cover admin fees. So then you would want to use that price point for the other half of the culverts. You just, really want to do what you guys have done historically, so you guys know what to do, and then measure it then, and then whatever you guys do, just make sure it's documented. You have rationale for your price reasoning. I have an example here also. So let's just say there's 124-inch diameter culverts at a price of $500, and 118-inch diameter culverts at $250. You would take the 100 times the 500 and the 100 times the 250, and you come up with $75,000. You also evaluate that for materiality. So is $75,000 significant to your entity? If it is, you may have to include culverts also as a type of inventory in your financial statements. If it's not, you can maybe pass on it and move on. And just some other kind of key takeaways here, just make sure whatever you're doing for your price reasoning, it's being documented and you have proper rationale for that. Moving on to chemicals. Chemicals and culverts are very similar, just is measurements the same. It's usually a little easier to measure chemicals just like culverts as compared to gravel. The only issue you may run across is maybe harder to track the usage, just because some people may fill up some trucks, and if not keeping track of that usage, it may be hard to see what's been used throughout the year. So just ensure a count's being conducted close to that fiscal year end date, or when all the activity is done for the year. If you're done spraying in September, do a count after September, and you're done buying everything, just do it then. Don't do a count in the middle of the summer in the middle of your season, because your count, you can't rely on that count. Then you'll have to do a new count after all the activity is done. And just ensure all your usage and purchases for additions are being tracked too, because that's also, your auditor may need that audit evidence too. Your evaluation is determined just like the other methods. You take what you have on hand by your price points for your various chemicals. You get a dollar value. You evaluate that for materiality, see if you need to include it on your statements also. And just note, it's only if you have it on hand. If you purchase a bunch of chemicals and you don't have it on hand, you haven't taken delivery on it, maybe you have more of a prepaid expense. It's not, you don't have it on hand to count. So I'll stress that again. And then just ensure usage is being tracked and a good process is in place so you guys can stay organized with that. Vaccines are another type of inventory we've come across. They usually only apply to health districts, health units and districts. Same process, just conduct a count and then measure it based on your various price points. And then if that's significant to you, you may have to include inventory in your health district's audit or as a component unit. Just note that Other entities technically can have vaccines. We just typically only see them in health units and districts because that's just the nature of their operations. The next section is regarding how inventory is presented in your guys' audit reports. So inventory should be recorded as a current asset on your fund level statements or your balance sheet, and also as an asset on your government-wide statements or as a in the statement of net position. So record with those other assets. If you have inventory in your component units, you'll also want to make sure that's included too in that statement of net position. If an inventory existed in prior years, you may have to go back and do a calculation just because you may have to restate the opening balance of your current year. If you found out that you only have inventory in this first year, you didn't have it in prior years, you don't have to worry about that. But if you did historically in the prior years, you may have to go back and do a calculation and get that amount for your prior period adjustment or PPA, sorry, weird acronym, my bad. That's the acronym of prior period adjustment if you see that reference throughout the audit. So here's just some examples of of some financial statements I took just a screen snip of so you can kind of see what it looks like in your audit if you have it. So here's an example of a balance sheet. We have inventory listed with our assets, and then we just have it presented with the special revenue fund. More than likely, this is just for gravel. We just put it with the special revenue fund because the highway fund is a special revenue fund, and gravel's everything to do with that highway fund. So that's why we put it in that fund column and not the other fund columns. If the other fund columns, for example, had all the chemical activity in the general fund for some reason, you would include it in that column. But since it's all dealing with the special revenue fund, you would put your inventory balance in that fund column. The next example is the statement of net position. So this is your government-wide statement. So you would include inventory here, and then with your primary government. And then here's actually a nice example here I referenced earlier to that separate column. This is where you would have your separate column for your component units. They're a discretely presented component unit, so they have a separate column off to the right of your primary government. Component units can also have inventory. If they would, you would simply record inventory in that column or row, for component units. Since these guys don't in this example, that's why it's left blank. Also note, any prior period adjustments would show up on your income statement and your statement of activities. Some best practices for you guys to take away today. So ensure some sort of measurement or count is being conducted. Like I'll say, that measurement really is key because that drives your volume. You want to make sure you have adequate audit evidence to use. Those drone reports are, I think, a great resource to use. If you don't have it, I would highly suggest maybe looking into to see if it's an option for you to get done. Like I said, you can use that as your audit evidence. If you have them, they take images of all the pits. They do an accurate measurement, I believe, and then you can use that for your count and your audit evidence. Some entities also have inventory software to help assist with tracking. So just use all of your tools at your disposal. If you have inventory or capabilities in your software, try to use it and get multiple people involved. You guys don't have to shoulder this all by yourself. If you have multiple people in your entity, deputies, assistants, get them involved, help segregate those duties even more, and get a good process in place. And lastly, keep track of all your documentation. Support documentation is very crucial. And that'll segue into our next section about support documentation. And then finally, to recap this section, we went over what inventory is, how to calculate and measure inventory, and what you guys need to be doing, how it's presented in your audit and what it looks like in your statements or can look like. And also we went over some best practices for you guys today. Our final section is support documentation. I want to cover a few areas in this section. I want to go over the importance of support, what we're seeing in our audits, some difficulties we've come across so you guys know what to look at and what can happen, and some best practices for you guys to take away today. So importance, what's the big deal of support? Why is it important and why should you guys care? So think of support as evidence. So your auditors are coming in and think of it as an investigation, as an audit. We're trying to get all the facts. So your auditors will need support to form the various opinions they form in their audits. Auditors also support their conclusions in the reports of the work product called audit documentation. In their audit documentation, they'll often reference your support. So think of your support as the driver for their opinions. If they feel comfortable with the support they receive, they should be able to give you an opinion, and that'll really affect the outcome of your audit. So your auditor also needs corroborating evidence to support their opinion they form. Like I said earlier in the example of inventory, we can't just take your word for it. We need to see that corroborating evidence. This is an independent audit, so we need to see that clear-cut evidence of support documentation. And this should be a major part of any audit you guys have had. We do financial statement audits, but there are other audits out there that you can potentially have that may need your support documentation. There's maybe other oversight agencies or grantors that are going to ask about your support. So for example, if there's a state or federal agency and they sent a grant down to you, they might do some monitoring. They might want to check out if you are spending their grant correctly, if you spent it on an allowable cost. They may want to check that out to make sure they're doing their adequate oversight. If they find out you aren't, maybe you don't provide any support, there's a chance maybe you don't get awarded a grant in the future, which nobody would want. So that's why it's important to maintain that support, not just for our audits, for our financial statement audits, but maybe for them if they're doing some monitoring. There's other audits out there. Maybe you need a compliance audit, a performance audit, or a forensic audit. More than likely, they're going to need to see some support too, not just our financial statement audits. So that's why it's always key to maintain that support. It's also nice to help yourself. It's nice to have a reference. It's nice to look back in the past year and say, okay, what did I maintain? What did I keep track of in the past? If you can go back, you can help yourself out. I'll often get questions on record retentions for this support. I know there are IRS guidelines out there. I'd first check to see if you have your own policy already. If you don't, I would highly suggest you get a policy in place and then get it approved by your board, get your board involved, then also get your state's attorney or legal counsel involved because you want to make sure they have a thought on that and make sure you're not missing anything with that too. If you then have a policy in place, you're caught up in all your audits, it's been some years, you should be able to get rid of those records. But if you are still hesitant on that, I know there's cloud capabilities, there's backup options out there. That can get spendy. So if you have resources for it, maybe look into that if you are still hesitant on fully getting rid of records. If not, you should be able to follow your policy. Moving on to difficulties. So we've come across a few different difficulties in the various audits we've conducted, so I want to kind of highlight those and kind of show you what can happen and what to look out for. So support documentation can really make or break your audit. We've seen some audits where we weren't able to maintain or receive much for support. So you looked at an opinion modification, whether it be a qualified opinion or an adverse or disclaimer. Your support really, like I said earlier, is the driver of that opinion. So just think of, no support equals your opinion being modified. And you also want to make sure you guys are maintaining the correct type of support. If we ask for support of an expenditure, we don't need to really see the check image you wrote. I'm glad you have dual signatures on all your checks, but we really need to see that invoice from that vendor because that invoice will tell the whole story. It'll tell us what the purpose of that purchase was. Was it an adequate or appropriate purchase? That invoice should have all that information. So just note, if you do not get invoices from the various vendors, I would reach out because they should be providing that invoice. And if they are not providing invoices, I would then question, should you be doing business with this vendor? Is that really an appropriate vendor to be doing if they're not going to provide a simple invoice for the services they provided or the goods you purchased? Some more difficulties. We found that expenses were missing invoices for the checks we requested. So if we, asked to see, we usually in all of our audits, just a standard practice, we select a sample. We found that there was a good chunk of missing invoices. So that really drove, if it was a significant amount of missing invoices, it drove an opinion modification. So that's why support's also very important. Inventory. So we found out that a lot of people weren't doing much with inventory tracking of their hauling or their crushing, or they weren't doing any type of measurement. So all that support's crucial too. Like I said earlier, your auditor may select a sample of your activity throughout the year. So it's important to maintain that support. Manual journal entries. We found in some instances, Management was just making entries at will. They weren't getting proper approval if they should have been, and they weren't maintaining the reasoning and the support of that adjustment. Capital assets, we've seen missing support for a lot of projects in some instances. You know, sometimes there's various large projects in CIP, which is construction in progress, and a lot of it has various invoices and activity for engineering costs, construction costs. You should be getting all those progressive estimates and final estimates from your contractors and engineers. If you're not, you should reach out. So sometimes stuff gets lost, so if you're not staying organized, you may miss out on some costs in some of those various major projects. Next, I wanted to go over some best practices for you guys today. So create a filing and tracking process. I know some people, some of our clients have software where they can utilize, where they can upload images of the invoices to each check. So if your auditor asks, can I see check 1050? You can bring it out in that software, and they can show them the invoice instead of rifling through a bunch of paper and trying to find that various invoice. So if your invoice has the capabilities of it, maybe look into using it. Utilize all your tools, guys. Get multiple people involved. Don't shoulder this by yourself. Get a team in, because organization is key. You want to get multiple parties involved. You want to stay on top of it and just create a process that everyone is comfortable with. A good tip I have is to create a capital asset folder. So what you could do is you want to then create a folder for each year. So anytime you have a capital asset purchase, you can put all that information for that purchase in a folder. If you get rid of an asset, you can put that information in there. If you have a project you started, you can put all that information in there. Then when your auditor asks, can I see the support for all your additions? Well, here's a folder right here. There you go. Make sure you're updating that folder throughout the year, not just doing it once at the end, just because you can forget what occurred throughout the year. I know you guys are all busy people, have busy lives, so you just want to make sure you're staying on top of that and you have a process in place. And create folders for other areas too. A good one is the manual general journal entries. So what you could do is you could create a folder for each journal entry. If you have to get board approval, you could put the meeting minutes in that folder. You can show what funds were affected, the reasoning for that adjustment. So all that support's there. So if your auditor asks for, can I see the support for manual general journal entry 22? You can grab it. Yep, it's right here. There it is. It's all in one folder. You're good to go. So those are just some great practices, guys. I'll just emphasize, just trying to stay organized, trying to stay on top of it is just going to help you guys out in the long run. To recap this section, we went over the importance of support, some difficulties you can encounter in our audits, and some best practices that you guys can try to implement in your audits so you don't have a modified opinion or run into issues in your audits. Some concluding remarks. Component units, start evaluating if you currently are not. It doesn't hurt to over-evaluate, so just try to go through that checklist. That checklist can be provided. We use it before each audit just to see if anything changed between the years, as sometimes stuff does change. Start looking into your potential inventory. If you think you have it, it's good. It's better to be prepared for it and you can have a little support as opposed to your auditor asking questions and then you finding you don't really have much of a process in place. So track, measure, support. That's just a good motto to live by for that. And then support documentation. That really drives your audit opinions. And then lastly, just create a process to stay organized, and then you guys should be in good hands if you create a process that you feel comfortable with. I wanted to say thank you for attending today, and I hope you guys all stick around for the rest of the presentations. Thank you.